Welcome to Q2's COVID-19 Government Support Update webinar. A special welcome to our valued clients who are attending this session today. We do appreciate having you with us. For those of you who have not met me before, my name is Anne Cooper-Smith and I'm the Director and CEO at Q2 and I'm today's presenter. Q2 Limited are a boutique firm of business strategists and chartered accountants. So thanks everybody for making the time to listen in today to this important webinar. We appreciate that these are unusual times with great uncertainty and concern for you all. We want you to know that we at Q2 are here for you, although remotely, to give you the support you need. This webinar summarises the support that the government is providing to businesses during this time, as well as some of the other commercial matters for you to consider. The session is a broad overview of the support that's been announced to date, and more assistance will be provided progressively over the coming months. We do expect some announcements to be made in the mid-May budget, and the government has indicated that further initiatives will be announced after the budget. At Q2, our core purpose is helping businesses succeed. So with that core purpose in mind, we're here to make sure that you're aware of the support that is available to you right now, and not just from the government, but from Q2 as business advisors and also from other parties as well. We know that you're getting COVID-19 updates from lots of different sources at the moment, and it's actually quite confusing. So what we've done here is we've accumulated the facts into this webinar so that you have a better understanding of the support that is available to you. So before we kick off, I just wanted to refer to this quote from our Minister of Finance, Grant Robertson. He said, "We need our businesses to stay solvent to help with the business recovery." So what we are seeing right now in terms of government support is likely to be just the beginning. There'll be more updates over time and we'll keep you updated as the situation evolves. So today's agenda covers a number of items in fairly briefly. We will cover the employer wage subsidy scheme, the mortgage holiday scheme, the business finance guarantee scheme, the regional business partner network grants for advisory services, some of the IRD debt relief that has been announced, small asset purchase thresholds, tax loss carryback scheme, and also we'll discuss landlords and leases. There's been announcements regarding insolvency relief for companies that we'll cover, and also what support programs that Q2 can offer, and then we'll summarise what your next steps are. As I've already mentioned, I do encourage you to take notes and submit any questions via the Q&A. And you can also request a copy of the slides after the presentation, and I expect this should take no more than 50 minutes in total. So I'll start with the employer wage subsidy scheme. Many of you will already have applied for this and received the subsidies through work and income. For those of you who, for whatever reason, have not yet applied for these subsidies, if your business is laying off people or reducing their hours because of COVID-19, it may qualify for the wage subsidy to keep it going. This is a brief refresher for those of you who have not yet applied for the subsidy. The subsidy is a lump sum payment for you to pass on to your employees. It covers 12 weeks' wages per employee and pays $585.80 per week for full-time workers. And full-time workers are defined as those who work 20 hours or more per week. The subsidy is for $350 per week for part-time workers, which is defined as those who work less than 20 hours per week. To qualify for the subsidy, your business must have suffered or is projected to suffer at least a 30% decline in revenue compared to the previous year for any given month between January 2020 and the end of the scheme in June 2020. This means that if your revenue for any month between January and June 2020 was 30% lower than the same month in the previous year, and the reduction was due to COVID-19, then you would be eligible for the subsidy. Applications can also be made on the basis of forecast revenue losses within the period of the scheme. If you are receiving the COVID-19 wage subsidy, you must try your hardest to pay the employees named in your application at least 80% of the usual wage. If that isn't possible, you need to pay at least the subsidy rate, either the full-time or part-time rate as applicable. If your employees' usual wages are less than the subsidy, you must pay them their usual wages, and any difference should be used to top up the wages of the other affected team members. The wage subsidy is designed to keep your employees connected to you. If your business has not been operating for a full year, or you are a high growth business, to qualify for the subsidy, you need to compare your revenue against the previous month that gives the best estimation of the revenue decline related to COVID-19. So for example, January 2020 compared to April 2020 shows a 30% loss in revenue, which is attributable to COVID-19. The subsidy is for 12 weeks from the date that you made application. At this stage, we understand that the scheme closes on the 9th of June 2020. To apply, go to the Work and Income website, and if you need help, contact us. Remember that anyone can search within the Work and Income website and see if a particular business has received a wage subsidy, along with how much they received. If you receive a subsidy and it turns out that you weren't eligible after all, you will need to repay the subsidy. When your business receives a subsidy, code it in your accounting system to a new income code, and we suggest COVID-19 wages subsidy as the name. There is no GST content and the receipt is not taxable, but the wages paid with the subsidy are not tax deductible. Just another point to note is that the wage payments made under the wage subsidy still incur 3% KiwiSaver employer contributions if the employee was in a KiwiSaver scheme, and 8% holiday pay will also accrue as a cost for your business. Next up is the Mortgage Holiday Scheme. Under this scheme, if your financial situation is affected by COVID-19, you could be eligible for a home loan repayment deferral for 6 months or even maybe more. Alternatively, you can talk to your bank about extending the term of your mortgage so that your monthly payments are lower, thereby placing less pressure on your business's cash flow. It's important to note that if you do obtain a principal and interest holiday, the interest accrues over the holiday period, and it will of course be added to the loan balance, so you'll end up paying more over the longer term. Most of the trading banks have an online process for getting the ball rolling on a mortgage holiday, so jump onto their website and you'll find that the process is quite simple. The government has launched a business finance guarantee scheme for small and medium-sized businesses. This is designed to protect jobs and support the economy. Eligible businesses may apply for one loan of up to $500,000. The loans will be for a period of up to 3 years and at interest rates from around about 4%. The actual interest rates will vary depending on each business and will also vary slightly from bank to bank. I will cover the eligibility rules shortly in the next slide. But the loan must be used to cover operating expenses, that is, things like wages and rent, rather than to fund capital expenditure such as buying a new business vehicle. But having said that, capital expenditure up to 5% of the total loan is allowed. The government is guaranteeing 80% of the risk, while the banks are covering the remaining 20%. A normal lending process will be followed by the banks, which will make the lending decisions, and further details can be found on your bank's website, and in some cases in an online application form. The banks that are participating in the scheme include ANZ, ASB, BNZ, Heartland Bank, HSBC, Kiwi Bank, SBS Bank, TSB and Westpac. While you're not required to apply to one of your current banks. Most businesses are doing so as it's a more logical way to start because you already have a relationship with your existing bank. As I've already mentioned, the scheme is designed to support small businesses. To be eligible, annual business turnover must be more than $250,000, but less than 80 mil. Certain businesses are not eligible, and in particular they include property investors and property developers, agricultural businesses, recreational cannabis type businesses, or the refinancing of existing loans, except for loans that have been advanced after the 16th of March 2020. Each of the trading banks will have slightly different information requirements for processing loans under the Business Finance Guarantee Scheme. Having said that, this is a level of information that most banks are currently requesting. First of all, you'll need to be able to show that you can service the debt based on your financial results prior to March 2020 and factoring in the new lending. In other words, the banks are recognising that some businesses will be trading at a loss for a period of time before the business stabilises and recovers. You'll also need a plan that demonstrates that the business has the ability to return to viability. This will likely be in the form of a business recovery business plan, along with a cash flow forecast. Most banks are requesting this. You will also need your latest financial results, and most banks are requesting them up to 31st of March 2020. If you have a real-time accounting software such as Xero and your figures are up to date, you'll be off to a great start. It will take the banks around 10 working days to process the loan applications under this scheme, and the banks are encouraging their clients to make best use of their accountants to prepare and present this information, and this is certainly where we can add a lot of value for our clients. Some of the information on this slide you can prepare for yourself, but much of it will also need our input. We're very mindful that you'll be worried about how you might be able to pay for our services, and there are some ways we can make this more workable for you. We realise that this is an incredibly stressful time for our clients and other businesses. As long as your business is eligible, we can help you prepare your finance application, and we can wait until the funds come through before we get paid. Alternatively, we do offer fee funding where you can spread the payments over 6, 9 or even 12 months. And very importantly, your business may qualify for the New Zealand Trade and Enterprise funding through the Regional Business Partner Network. Q2 Limited are a registered service provider with the Regional Business Partner Network, meaning that some of the additional work that is required to obtain business finance may be covered by the grant funding. Contact us to find out how to go about applying for a grant through your local regional business partner. While we're on the subject of grant funding, the government has announced a further $25 million in funding for the Regional Business Partner Network. $20 million of that will be invested in direct business consulting services to ensure that a wider range of businesses can get the support they need. Business will be able to access free, tailored specialist support for a range of issues that they may be currently facing, such as business continuity planning, finance and cash flow management, HR and staffing issues, health and wellness, and potentially any sector-specific issues. At present, the 100% free funding for COVID-19 support is limited to $2,000 per business. The Regional Partner Network advised that they are prioritising applicants who are employers and also companies who need the funding due to the impact of COVID-19 and that will, with help, emerge with a sustainable business. There is currently a wait time of 5 days for your application to be approved. The Regional Partner Network will scale up their existing advisory services so that more businesses can receive the support over the next 12 months. And the existing helplines often used by businesses, such as those operated by the Employers and Manufacturing Association, are also going to be extended. The Zero Assistance Program, also known as ZAP, is a 12-month pilot program that aims to provide mental wellbeing counselling and resources to Kiwi small businesses. Confidential counselling sessions are available via phone, video conference or live chat to help with work-related and personal issues. ZAP is available to all Xero partners as well as any of their clients on starter, standard or premium plans and their employees and families. So Q2 are a Xero partner and therefore many of Q2 clients will be able to access this free support. If you would like to find out more, you can email zap@xero.com or visit the Xero website. Xero are also hosting Xero Hours, which are a fortnightly online curated meeting of minds and sharing of ideas. The first topic for the Xero Hours fortnightly discussion will be pivoting to outlast COVID-19, and this session is going to be held on the 7th of May at 12:30 p.m. Contact us if you are interested in attending and we'll send you the details. Next up, I want to cover some of the IRD relief that has been announced so far. They've announced so far interest remission once core tax has been paid, remission of penalties, greater flexibility with tax payment dates, instalment arrangements, write-offs due to serious hardship, and write-offs under the maximum recovery criteria. So to be eligible for remittance of penalties and use of money interest, customers must meet the following criteria: that they have tax that is due on or after the 14th of February 2020, their ability to pay by due date, either physically or financially, has been significantly affected by COVID-19. They will be expected to contact the Commissioner as soon as practicable to request relief, and they are also required to file the outstanding tax returns as soon as they can and pay the tax as soon as they can. They must have been significantly adversely affected by COVID-19 financially, and their income or revenue has reduced as a consequence of COVID-19. And as a result of that reduction in income or revenue is the reason why they are unable to pay their taxes in full and on time. The rules are very subjective. The legislation quotes as soon as practicable, which will be determined on the facts of each case. The Inland Revenue considers the term means that so long as the taxpayer applies for relief at the earliest opportunity and agrees to go an arrangement that will see the outstanding tax paid at the earliest opportunity or will be paid over the most reasonable period given the taxpayer's specific circumstances, then the test will be met. As I said, it's very subjective. Inland Revenue does accept that some customers will have difficulty paying their taxes in full and on time. However, it is important that they continue to file their tax returns on time, that is GST, FBT, income tax and so on. The information in those returns will allow Inland Revenue to have a more complete picture of the customer's financial position when considering the various options for relief. And filing your tax returns on time may also reduce the amount of information required by the IRD for them to consider whether or not to agree to a request for relief, and also the extent of that relief. In addition to that, the information in your tax return provides important information to the government. At present time, it allows the IRD to monitor the effects of COVID-19 on New Zealand's economy. Inland Revenue is being given discretionary power to provide an extension to due dates and timeframes across all tax legislation. This could include, for example, extending deadlines for filing of tax returns and paying provisional tax or terminal tax. And at this stage, the power will be time limited for the period of the next 18 months. In addition to the specific relief and the discretionary measures outlined, Q2 can work with you to put forward an application to IRD for an instalment arrangement, ensuring that you keep valuable cash flow in your business. Depending on your specific circumstances, there may be occasions when a write-off of core tax may be available if payment would place you in a serious financial hardship situation, or if the amount that you are paying represents the best possible outcome commercially for the IRD, all things being considered. There are some very specific criteria that IRD is required to follow under the legislation, and we would need to assist you to provide the required information for IRD's consideration. It's important that you work with us so that we can get the best possible outcome for you with the IRD. It'll be very challenging at the moment for clients to get the outcomes they want by phoning the IRD call centre. This will be very stressful and time-consuming. Another IRD change is the small asset write-off threshold. Until the 16th of March 2020, small assets costing less than $500 plus GST have been able to be claimed as an immediate tax deduction. For example, if you bought an office chair that cost $400, you could write it off against your taxable income right away. But if you bought several office chairs together and the cost was more than $500 plus GST, then you had to capitalise and depreciate them so that the cost is claimed for tax purposes spread over the useful life of the asset. As another way to assist businesses during the current crisis, the small asset thresholds have been temporarily increased to $5,000 for the period 17th of March 2020 to 16th of March 2021. That means that for any assets purchased during that period that cost less than $5,000 plus GST, they can be claimed as an immediate tax deduction. This will reduce your taxable profit and the income tax payable, but it's a temporary change. After 17th of March 21, the small asset threshold will drop back to $1,000 plus GST and remain at that level for future tax years. A new loss carryback scheme has also been announced and will enable a business to offset a loss in a particular tax year against a profit in a previous year and receive a refund of tax paid in the previous profitable year. In other words, the business will be allowed to carry the loss back 1 year, and the proposed mechanism will provide cash to businesses that are or anticipate being in a loss situation. As a temporary measure will apply from the 1920 tax year and the 2021 tax year, and this temporary mechanism is being included in a bill that's being introduced to Parliament under urgency this week. Inland Revenue has been undertaking targeted consultation with various tax advisors to make the law and administrative guidance as clear as possible. It is planned that in the second half of 2020, a permanent application for future years will be designed and legislated after further public consultation. We will need to see and interpret the fine print in the bill before we can practically help clients use the scheme to get a refund of tax that they have paid in a previous financial year. For example, we would expect a company would need sufficient imputation credits to allow a release of a tax refund. We will also need to be careful the basis on which we estimate, as it would be expected to be use of money interest cost if you get it wrong and essentially receive too much of a tax refund back. The IRD have announced that taxpayers do not need to rush in to re-estimate their provisional tax before the 7th of May. Part of the proposed law change that is coming will make it possible to re-estimate the provisional tax after the date of the final instalment. This will give us more time to work out any estimated loss for the 2021 income year. Let's look at a worked example and how this could be calculated. Okay, in this example, Company A was, until recently, profitable and in good financial health. It is expected to return $200,000 in net taxable income for the year ending March 2020. This company has already paid $45,000 in provisional tax instalments in the first P1 and P2, and it has a final provisional tax payment of $11,000 due on 7th of May 2020, which is next week. As a result of the COVID-19 lockdown, the company has temporarily halted its business activity, although it's still paying rent and staff. wages. Last week, the directors met and are projecting a loss for the next financial year ending 31st of March 21. Although the projections are just estimates at this stage, it looks like the company may have a tax loss in the range of $150,000 to $200,000 in the next tax year ending March 21. Under the new tax loss carryback scheme, we expect that Company A will be able to alter its third provisional tax payment that's due next week on the 7th of May 20. If Company A adopts an income projection for the 21 at the lower end of the estimated scale, so we estimate it, say, at $150,000 rather than $200,000 loss, this will help reduce its exposure to use of money interest if we make the estimate too high. And we will be able to carry back this loss to the 1920 tax year and re-estimate the company's income down to $50,000. So the profit for the 2020 year was $200,000 and the expected loss for the 21 tax year is $150,000. So the combination of those 2 years would make the income for the 2 years $50,000. So the tax on $50,000 is $14,000, which is a 28% tax rate for companies. Because the company has already paid $45,000 in tax, the company doesn't have to pay anything on the 7th of May, and we expect it could get a refund of $31,000 that it's already paid from its earlier provisional tax payments. So we need to be very careful estimating losses for the coming year. We're only in April today, and we still have 11 months to go and a lot of uncertainty. And we also need a lot more detail around how the tax loss carryback scheme could work. And we encourage clients to get in touch with us to discuss their own situation and how the tax carryback scheme could be used once the legislation is passed and we have more detail about how it will actually be implemented. There's been a few other IRD relief measures as well. These include the provisional tax threshold being increased from $2,500 to $5,000, and this is effective on 1st of April 2020. This means that fewer taxpayers will be classed as a provisional taxpayer for the next tax year. Another thing that's changed is the depreciation will be allowed on commercial industrial buildings from the 1st of April 2020. This was removed several years ago and as a result of the COVID-19 is being reintroduced. The government is also removing the R's test from the in-work tax credit, and this is effective from 1st of July 2020. Now we want to talk about commercial tenants and landlords. Many commercial lease agreements include what we call a no access and emergency clause to cover circumstances where tenants cannot occupy their premises. This is typically a clause 27.5, which was introduced into the standard commercial lease agreement template after the 2011 Christchurch earthquakes. This clause means that landlords need to assess a rent abatement or refund being a fair proportion of the rent and outgoings for the period that the premises cannot be occupied. As to what is a fair proportion, that depends on the type of business, whether it's retail, office, manufacturing, or whatever. There are no hard and fast rules here, and what we are seeing is that tenants and their landlords are working together to come to a compromise. After all, it makes sense that the landlord shares some of the pain that their tenants are experiencing, and it's also in their best interest to have a solvent tenant whose business will survive. Please note that if your business is classified as an essential business, then you will not be entitled to a rent abatement. While many businesses, including commercial landlords and tenants, are working together to find a way through the pressures caused by COVID-19, the government is also extending the timeframes required before landlords can cancel leases and mortgagees can exercise their rights to sale or repossession. The current timeframe for commercial landlords to cancel a lease will be extended from 10 working days to 30 working days, and the changes allow for more time for breaches or defaults to be remedied. covering the period that the tenant is in arrears before a notice can be given, and the period required to remedy the breach before the landlord can cancel the lease, or the mortgagee can exercise their right to sale or repossession. There's new company law legislation underway as well to help companies facing insolvency due to COVID-19 and will help them remain viable. The relief under this new legislation will include giving directors of companies facing significant liquidity problems because of COVID-19 what they call a safe harbour from insolvency duties under the Companies Act. Company directors are not supposed to continue to trade whilst the company is insolvent, which is defined as not being able to pay their debts as they fall due. But the reality is that many businesses face insolvency as a result of COVID-19, so there's a practical change to the Act. This change is designed to encourage company directors to continue to trade, even although their company is insolvent. The government is trying to reduce unnecessary business failures that would be caused by company directors calling it quits because of the risk of personal liability that usually results when a company trades while insolvent. Another measure is enabling businesses affected by COVID-19 to place their debts into hibernation until they are able to start trading normally again. The debt hibernation will require 30% of the company's creditors to agree. Another change is allowing the use of electronic signatures where necessary due to COVID-19 restrictions, which is effectively people working from home and not being able to send or scan documents. Giving the Register of Companies the power to temporarily extend deadlines imposed on companies, incorporated societies, charitable trusts and other entities under the legislation is also given, and there's also temporarily for entities that are unable to comply with requirements to the constitutions or rules because of COVID-19. So these are just some of the changes that provide some practical relief for companies in this challenging time. I trust I haven't overwhelmed you with too much technical detail during this webinar. There's a lot going on, but our goal here has been to share with you the huge range of support that's available at this time for small businesses. And it's our job at Q2 to interpret this information as it applies to your business. So what are your next steps from here? Clearly doing nothing is not an option. There are so many avenues for support, and we don't want you to miss out on any opportunities or entitlements. And remember to put your oxygen mask on yourself first. Be more sustainable so that you can make your business right now, and that will be better for everybody. And make a plan to get through these challenging times. Then focus on what you can do as opposed to worrying about things that might happen in the future or that are outside of your control. And remember, Q2 are here to help you, and we do want to help you. Before lockdown in March, we offered our clients a business continuity plan guide and template, free of charge. The business continuity plan should cover things such as maintaining well-being and resilience, personal budgeting, personal asset planning, supporting your team with clear COVID-19 policies and communication, in particular around what you're planning to do and any restructuring of your team or change of roles and things like that. It also should include ways to support and retain your customers, and think about updating your terms of trade and payment terms. You also need to think about how you can work with your suppliers to ensure continued supply of goods, and maybe even return of goods that you no longer need. Can you return them? And you may be able to negotiate new payment terms or contracts. You'll need to relook at your business cash flow forecast and, of course, best cash flow management. Cash flow management includes looking at your accounts receivable processes, your accounts payable processes, and stock management and planning. Every business will need an updated cash flow forecast to take into account of the changes resulting from COVID-19, and also the changes to taxes payable and tax planning, as outlined earlier in this webinar. You may also need to consider your debt and capital structures, including obtaining additional funding or mortgage holidays. Perhaps look at your overhead expenditure and how you can reduce that, or how you can improve your gross profit efficiencies and margins, ways that you can increase sales, or maybe even selling unused assets and equipment that you no longer need. And you'll also need to reevaluate your capital expenditure requirements and how you will fund those. As part of your business continuity planning, you should also review your important contracts such as insurances, leases, and of course, employment contracts. And review the different types of support that are available to your business, as we've already outlined. As you can see, there are many aspects you can consider in your business continuity planning, and Q2 can assist you with that as well. Our business continuity planning and service is designed to support our clients in developing a plan to get through the coming months and years. The business continuity plan helps identify the actions you need to take to prepare for the ongoing impact of COVID-19 and to maximise the entitlements to the government and other support and minimise the downstream impact of a downturn in business. We will be running a free webinar on business continuity planning at 2 p.m. on Tuesday, the 19th of May. So watch out for that and book your place so that you don't miss out. So how can Q2 help you with this at this time? There's several ways. We can help you with an online business continuity planning session. This is a collaborative approach to developing the plan and involves pre-work, either one 4-hour session or two 2-hour online facilitated planning sessions, and developing a plan for you to implement. This service is designed for business owners to ensure they build resilience, preserve profitability, cash flow, and employment for their team, and survive through this difficult time. Our usual fee for this type of service is $2,500 plus GIST, but we have reduced the price to $1,750 plus GIST as a gesture to support our clients. Regional Partner Network grant funding may also cover the service for eligible businesses. We understand that many business owners will want to develop their own plan in these uncertain times, so the Business Continuity Plan Review service allows business owners to use their guide and templates to create their own draft business continuity plan, and then meet with us online for 90 minutes to review and finalise it. We're also happy to provide a business continuity template and guide to any clients that request it, free of charge, so that they can develop their own plan to help them survive through this uncertain time. We're also able to work with clients to develop a cash flow forecast to determine cash flow and funding requirements taking into account COVID-19. The cost of the service will depend on the size and the specific needs of the business, but for an average small business, this will likely be in the range of around about $1,500 plus GST, and regional grant funding is also available to cover this service for eligible businesses. We can also help businesses with their finance application under the guarantee scheme and also with IRD projects. These services are specific to each client, and we would need to discuss and agree on the scope and price of each project before commencing. And as I've already mentioned, we can help you prepare, and you may also be prepare finance, and we can wait until the funds are received before we get paid. And we can also spread the payments over 6, 9, or even 12 months. And very importantly, please remember that your business may qualify for the Regional Business Partner Network grant funding of up to $2,000 plus GST. And Q2 are registered service providers under this scheme, meaning some of the additional work that you need us to help you with will be covered by the grant funding. I strongly encourage you to contact us to find out how to go about applying for the grant funding through your local regional partner network. There is a box on the feedback form that we will send you, so please tick it if you'd like more information about this. And on the webinar feedback survey, you can also indicate if you're receiving more information about any of the support options we've outlined today, or once again, if you would like a copy of these slides for your future reference. If you have questions or you have already submitted questions during this webinar, we will answer those in writing after the session. Alternatively, you can contact us directly if you wish to discuss with us your situation further. So thanks for making the time to attend this webinar. We appreciate your time is really valuable right now during COVID-19 level 3. We hope we've given you plenty of ideas to think about and some clear options for how we can support you. Before we go, I'd like to share this quote with you. A good plan today is better than a perfect plan tomorrow. And that quote was from George Patton, who was a general in the American Army in World War II. So make a simple plan today. Commit to at least 3 actions that you will take as a result of being here today. Write them down and give each of them an owner and a completion date. This is a worrying time for many businesses, but you don't need to worry alone. There's a ton of support out there, and there will be more to come, and we will be here to help you as well. And make sure you register for our next free webinar on business continuity planning on the 19th of May at 2 p.m. So thank you everybody for attending this webinar. I would really appreciate the fact that you made the time. As you exit, there'll be a short feedback form which we would really like you to complete. So thanks in advance for that. And that's all from me. Until next month, I hope to see you at the next webinar.